This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, May 7th, 2022. Actually, it's May 8th. Sorry about that. I forgot to change it after I did the slide yesterday. So happy Mother's Day to everybody out there who is a mother or has a mother. So hopefully that's all of you all, and you have a great day with friends and family. As always, this weekend reviews for educational purposes only. Not recommending any stocks or securities to buy or sell. And particularly right now, all investing has substantial risk of big losses. So we want to learn first and only then invest. And of course, Canslim is a registered trademark of Investors Business Daily. And the material I'm presenting is from a Canslim growth stock investor perspective. So topics for today, we'll look at the M factor. Would we see this week constructive action or destructive action? Hint, we've got a train wreck in a hurricane in front of a tidal wave. So nothing really positive in the market action this week. Charts, leading names, they're trashed except for oil, gas, metals. Probably should have just called that energy. And then we'll look at our monthly meetings, and the next one will be coming up a week from Tuesday. So as O'Neill teaches us, the M is the most important letter in Canslim. 50% of the battle is being correct on the M. 3 out of 4 stocks follow the general market trend, and I've never seen anybody research or present any research to the contrary. And I think we're in a bad bear market. When we're in one like now, that could go to 9 out of 10 stocks, I think, following the trend, or 8 out of 10. The number gets worse. So we want to stay in step with the trend. Otherwise, we're going to have a bad outcome. As I said last week, you wouldn't get on a ship getting ready to sail into a storm if you knew only 1 out of 10 ships was going to make it through that storm, and that 90% of them were going to sink or have a very poor outcome. So very difficult to win on the long side when the trend is not your friend. Even the strong swimmers are going to have issues going upstream. So it just looks like this still right now. And if we look at the M factor, we're supposed to look at 3 things: the action of leading stocks, not many leaders now, sort of down to the energy sector, actions of stocks owned, not much also. In fact, perfectly appropriate for Canslim investors to be in 100% cash right now. Market pulse, or just have a couple pilot positions maybe. So market pulse, distribution day count, price and volume on the indexes, and the coloring book, which is my personal tool I use just to give me more color on the market direction. So it's just a trend tracking tool is all that is. So let's hop out of here and look at those. So we'll go to MarketSmith first. Let's go to the NASDAQ. Close this. So here we are. So these red lines are 10% off the top, 20%, and 25%. So you see now we're down at 25%, or just over 25% off the top. So things are getting worse. Moving average lines, they've all crossed over. They're in the exact opposite order we want to see them. Now the 10's under the 21, 21's under the 50, 50's under the 200. In fact, we had what some people call a death cross way back here when the 50 crosses the 200. RS lines plunging down. We had a rally day this week on Monday. We undercut that, killed it. So there's just not much constructive on that chart right now. S&P 500, sort of the same thing. The only thing on these, do note, they're not officially in bear market territory yet. That's this red line down here. So S&P's, halfway between 10 and 20 approximately. It did not undercut the rally day on Monday, but it's getting awful close. So it certainly could kill that in a heartbeat. NYSE, just barely 10% off, RS line trending up. So that's the energy strength that you're seeing there. Dow, just under 10% off. Here's a 20% off line down here. So we could have more room to go, obviously, on these. Market's going to do what it wants to do. Russell is as bad as the NASDAQ, down at 25% off. Again, I think on every index, let's look at the NYSE, it was best. don't we have, yeah, moving average lines are in the wrong order on everything and are plunging down on all 6 indexes we look at. S&P 600, not quite as bad as the Russell and the NASDAQ, not 20% off yet, but again, moving average lines all in the wrong order. Had the 50 cross over the 200 way back here. So just not much constructive to see there. And let's look at the coloring book real quick. Pull it up. So I haven't filled in all of Friday's line yet, but Thursday was obviously a terrible day. The Fed met Wednesday. And so the comments by Powell about not doing 3/4 point hikes by now, and sort of he expects inflation to end earlier or later this year. That goosed the market after his 2:30 price conference. Had big reversal day, and the NASDAQ ended up 4%. Oh, I don't have the number in there right. I'll fix that. The Dow was up 932 points, 2.8%. I think this was up 400 and something points. Had energy stock, Exxon broke out that day, lithium gapped up that day, and then the next day the markets just got crushed. NASDAQ was off 4.99%, Dow was off over 1,000, and then Friday we threw in distribution days, and Thursday the rally day on the NASDAQ failed, as I already showed you. I only have 6 buying days, 13 selling days. The market school exposure is at 0, and we're in a power outage situation. We did have the window of opportunity open briefly for 1 day and then slam back on our fingers. So this is just all real negative. All the MMTS factors are red. Just nothing positive there. And the group teaching portfolio, we don't have much exposure. Merck's the only full position. They are all up just a little bit. It's only a half position. This is less than half a position, and we are 29% invested. So that may even be a little bit heavy. Maybe 20% or so might be more appropriate in my mind for me. You do what works best for you. We're off 8.7% for the year. As I pointed out, the NASDAQ's off 25%. So while we're outperforming that, that's still not the goal. The goal is to be green. So been a very tough year. And if you want to see something really ugly, if you go to the details sold page, remember I have the spreadsheet. I spent 2 years putting everything in there that I wanted. So it's for post analysis. So if you go to the sold page, this tracks on every position the actual realized gain and then what happened since it was sold. So this column is based on the sales price. And so if we go through all the trades for this year, we're down. That 34,000 was the number you saw on page 1. But since it was sold, here you can sort of see some random dates. And now it's down to, it's off all those positions. If you held all of them, are off $183,000 since they were sold. Obviously, you couldn't hold that money at once because you don't have that much cash or room for those positions. But that just shows you, it's just another indicator we definitely are in a downtrend that I look at, and that's why I built that into this spreadsheet, and also for post analysis on every trade. So let's go back over here. We looked at everything there. Some keynotes. Window of opportunities closed. IBD's in correction, obviously. All the MMTS on all 6 indexes I track are solid red. Distribution days are racking up. We have 8, 8, and 8 on the NASDAQ, S&P 500, and the Dow. I know IBD doesn't track those, but I still track them even when we're in correction. I want to know how much distribution there is in the 25-day window. Market school models at 0 exposure. Buy sell day count, only 6 buying days, 13 selling days in the last 25 days. So definitely is a distribution dominant tape right now, as Mark Minervini. That's where I got that concept. Matt Caruso, high-low indicator, has been showing NASDAQ weakness, and now we have NYSE weakness joined in. Those are both red. Rally days this week on each index. NASDAQ failed. The other 2 are close. Charts are just getting whacked on individual stocks. Growth had already been in a bear market. Everything else except energy is catching up. And then the power outage, if you take the power trend conditions and flip them upside down like David Ryan talked about, those trigger this week. And that just shows it's a more severe, clearly apparent downtrend when that happens. So still a lot of red lights, same slide I used last weekend. I don't have a better one. Serious train wreck conditions just continue. Headline risk. Got Fed talk and now the Fed walk, how fast and how far on rates and balance sheet reduction. We have inflation. This weekend at Costco, milk and gas were about the same price per gallon. Getting rice like $3.89, right up there. I think gas might have been a little bit cheaper, but pretty close to the same. Recession threats, we already have 1 quarter of negative GDP, and with the inflation, certainly it seems we're headed officially for a recession. Got supply chain issues just all over the place in these conference calls. Earnings season started April 1st. It will wrap up this week. Yeah, this week or first early next week for everybody. It's on quarter calendars fiscally. So been very ugly so far. Hardly any viable gap ups and stocks just getting crushed. War situation, today's day 74. And then you have Russia exposure issues in conference call, which even gets into the energy sector. That's kind of helping it with oil embargo, not buying from Russia. Things to keep an eye on. Are we going to see capitulation? I want to look for fear, put call really spiking up there. Maybe the VIX really spiking up there too. Are we going to see some climax runs in the energy stocks, sort of the last sector tree in the forest? That would show us, that's usually the last group to topple when we're in a bear market. Apple and Tesla charts, are we going to see major breakdowns? Those are sort of the last stock trees in the forest. Everyday conversations from non-investors. So when you start hearing people that never talk about investing or the stock market in your life, talking about how, hey, my 401k is now a 101k, or not wanting to open their monthly statements, that's sort of a good secondary indicator that maybe we're close to a bottom. Hey, are we going to see ARC outflows? Maybe this is the indicator we're looking for. They had, I think, record inflows again this week when they're absolutely getting pummeled. Keep buying the same stocks over and over that are just going down and down. And then the average bear market is 9 months per O'Neill Research. So we're 5.5 months in. August 22nd, just for the record, would be 9 months. The dot-com bear and the financial crisis bear went much longer. They lasted in years measurement. So we just keep an eye on that. There's nothing hard and fast about that. But right after this, it would be when we're through the low volume summer. We would probably know where rate hikes were going to end up, where balance sheets going to end up, whether we're in a recession. Maybe the Fed has to back off some because they did too much damage. So we'll just have to see. So keep an eye on. We want a rally day and a follow through day still, and probably one of those feelings that, well, no way this one's working. We just got beaten to death. So that's how we felt on the COVID follow through day. Canslim stocks setting up in full and proper basis. This is really important. We are still missing this. We've got to have that for a rally day and follow through day to work very well. You maybe get a short tradable rally, but for the one that really works. And then you've got roughly a 10-week window after the follow through day for the best merchandise to give us proper entry. Yeah, that was it. And then Dan Fitzpatrick did a nice video he just released that's worth reviewing, just talking about trend following, good Canslim principles. We're not trying to catch the top and the bottom, let somebody else have the first 10% and the last 10%. We just want to find that trend and be in accordance with it. And right now that trend is down, so being in accordance with it means patiently sitting on our hands. So let's look at some charts real quick. Go back to Market Smith. Here's ARC. If we go to a weekly chart, you can see they are all the way back below where they were when we came out of the COVID bear market back here in spring of 2020. And we can look at some of these have all gotten hit. Netflix, boom, off the cliff. Coin, off the cliff. Roblox, off the cliff. Path, all the, and again, some of these, Upstart may be the one. Yeah, phenomenal, triple digit earnings and sales. But the chart, boom, off the cliff. Scott O'Neill said one time, it's always stuck with me, that your conviction in a stock can never overcome the chart. I'll say that again, your conviction in a stock, in the story, can never overcome the chart. And that keeps you out of a lot of trouble. In fact, when he was teaching that, he said we had 2 portfolio managers that ignored that principle, and we now have 2 less portfolio managers at O'Neill. So Merck, this is one of the few that's holding up near all-time highs. For some reason, bad market, I guess it decided it needed 2 handles. So we'll see what happens on that. Nice RS line. EEE, this is a recent IPO. This is really one of the commodity plays because this is at the intersection of natural gas and shipping. So we'll see what it does. Got a 22% deep IPO base. Lithium, gapped up on earnings, still down in the base, but this was like a 30% gap, and it gave back under 0.5% the next 2 days. So that's really showing us some strength in a bad market. And then Albemarle, I don't even know how to say it. This is another lithium play. So it was up strongly on lithium's earnings, and then it also had its own earnings. And it was up this day, and then it had earnings on Thursday. So it gapped up on earnings, and it held all that Friday. So remember, these were 2 really bad days in a market. And this stock, look at that RS line, it's saying, hey, look at me. I'm not doing what the market's doing. Just pay attention. I'm a potential leader. So go back, monthly online classes. So our last meeting was April 12th. Next meeting will be Tuesday, May 17th at 7 p.m. Eastern. So I'll get that up on the Stockyard Meetup site. Tuition's $12 per meeting, $15 tuition if you don't sign up for the meeting and order later. And first timers get a courtesy copy of the most recent meeting recording and slide deck. Here's the things we covered in April. Obviously in May, we'll cover distribution days, rally days, follow through days, where the market is, stock setting up, post analysis, IPOs, that sort of thing. So we'll look at all those. Here's prior meetings. These can be ordered. If you don't have written sell rules, you're feeling the pain of that in this bear market. So I spent 3 months teaching that. Those are really good, I think, or I get really good feedback at least. If you don't have a good weekend routine, covered that in September and October in great detail from a Canslim perspective. So those are in there. If you're interested, just send me an email. I'll send you the whole list with the ordering instructions. 2 meetup sites. You can follow me on Twitter, also the Stockyard YouTube page, which is where you are now. So like and subscribe over there. And then here's the meetup sites, just so you know what they look like. So here's the Greenville East Side one, the official one with IBD. If you go to the More tab, message boards, there's a ton of information that I have linked in there. And then the Stockyard looks like this. And this is all I do on this one is you sign up for the meetings. That's how I coordinate that. So I think that's it. I'm out of here. Y'all have a great Mother's Day and fun with your families. See you next weekend.